so you might have to adjust your speakers. I'll turn it down a little bit more. Is that better? Testing. 1, 2, and 3. All right. Okay, there we go. All right, let's go ahead and get started. I know we got a lot to cover, and to show you how I trade every day. And it might be something that you want to try out, might be something you want to add to your trading. And if you do, you can try it all out, and I'll show you how to try it all out at no cost. Okay? So first, put up risk disclosures, et cetera, et cetera. And I think Fred, every offer is going to be a little bit different. So like the last guy that was on, his offer was good for the first 100 subscribers. So it depends upon the offer. Still guessing on the Google thing. And then, okay, here's the disclosure. So we got the random disclosures. I'm just going to put those up there. Of course, trading involves risk. Don't take risk that you can't afford to take. Secret, as if there is really a big secret. Not so much. But the real difference between a professional trader is they see the market differently, okay, than you could say the retail trader, the part-time trader investor. They look at the market as a supplier versus a consumer. As retail traders, we're often taught that, okay, when support or resistance line, and then when it hits this Fibonacci level, combined with this golden ratio and Gann, and on this wave, when you get that combined, you know you got to buy or you know you got to sell. Okay? So you get all these combinations, and you can't make heads or tails of the 45 different indicators on your chart. So, exactly. So when you put all that together, what you really get is you get a lot of traders placing orders at certain levels. And the market is about one thing. It's not about fulfilling your indicators, projections. And we all know that, but yet we all use, we get in to fill orders. A grocery market exists to fill orders, right? If you go there, you want to find the bread, and you want to be able to check out and get your order filled and give them a certain amount of money for your slice of bread, okay, your loaf of bread. If you can't get your order filled, you're not going to go to that market no more. If the lines are too long, if they don't have the bread, okay, if the bread is too expensive, etc. If it's too cheap, the market's going to go out of business, and it's not going to be there anymore. So markets are about filling orders. They move to where the orders are. Exchanges only make money, supermarkets only make money if orders are filled. If there are, yes, you talk about supply, demand, but I'm not talking about supply when I say supplier, okay? I'm talking about being where the orders are. And so what you got to start doing is you got to start thinking back, and this is sort of an amazing thing if you really think about it. When I look at a trade, when this happens, I will do this. When it gets to this point, I'm going to buy or I'm going to sell. Well, so does everybody else. Okay, they have these support resistance, these pivots, and I mean, I use a unique type. We'll talk about that too. But they have their ways of doing this, and when everybody has things that cross together, like golden ratio, Gann, Fib, support resistance, moving average crossovers, stochastic, MACD, or whatever, when those come together, they're called confluence. We've all heard about confluence before if you've been trading for any period of time. Well, that means a lot of orders are placed there. And think about how many times you've been right about when it gets here, I'm going to buy, or when it gets here, I'm going to sell. Probably most of the time because that's all you told, and it was sort of a 50-50 about what happened after that. But you're right almost all the time about it getting there. Well, that's how a professional trader thinks. They think one step ahead. Yes, this is Darrell. And so a professional trader goes, when it gets there, there's going to be a lot of orders. There's going to be a lot of orders there, so the market's going to go there. I have a big position I need to unload. I need to unload that order where there's going to be a lot of orders. So what I'm going to do is I'm going to get in now, and I'm going to start taking profits or trailing my stops when it gets to that point. Okay? So it's one step ahead of that point where you go, wait a minute, that's where I'm going to get in. That's probably where I need to be taking profit or tightening my stop, because that's for everybody buying and selling. That's where I know orders are going to be located. Therefore, the market is going to go to where the orders are. Okay? So you got to keep those pieces together in your mind. You got to go, okay, what would I do now? How do I take advantage of what would I do? And it sounds really, it almost sounds bad, but if you're a trader, you get it. Is how would I take my money if I knew what I was going to do? And that's how I need to trade. So I need to stay one step ahead. So you will see a chart. Right now you should be seeing a PowerPoint. And then you want to filter out the noise. So many traders they get stuck on 5-minute bars and 10-minute bars and daily bars. Why do you have another bar? Simply because minutes have passed. Minutes passing has nothing to do with filling orders. So if you're still using 5 and 10-minute and 30-minute and 1 hour and 120-minute and 180-minute bars, just think about the logic behind it. I'm not saying it's wrong and you can't do it at all. I'm just saying, is there an actual logical reason that you have a new bar every time so many minutes have passed in a day? So exactly, time has never made you money. Price movement is what makes you money. So your bar should be priced based. Okay, and you also need to have proper expectations of market movement. We've had some great presentations already today about this. Is market movement, which is like a standard deviation bell curve. Now, I use implied volatility, which one of the presenters talked about today, using implied volatility, but I use it on an intraday basis. I'm more of an intraday trader. You can do this on a longer time frame. You just use bigger bars. It's not hard to do. I'll show you Facebook. I'll show you Google. I'll show you gold. I'll show you S&P, Russell, oil, on down the list. Okay? And there are no charts on the screen right now. There will be in a second. So one thing I want to point out is trading is not as easy as we think right now is where you should be. So click on desktop sharing if you're not there. Trading is not as easy as we want it to be. It's also not as hard as most people think it is. Okay, so there is a little work involved into trading. If you think you're going to buy some green arrow system, green and red arrow system, well, you can keep buying those and you can keep losing money like you have over the past 5, 10, 20 years. Or to actually make trading work. What you need, though, is you need a trading plan. And it needs to have a system. Your trading needs to be very system-based. Okay? It needs to have an exact entry, an exact stop loss, an exact trailing stop method. And you have to have this to have consistency. So the part now, do you be pure system-based? No, I have style, but I don't let my style tell me when to get into trades. Okay? And at most, I let it tell me when to get out if I need to. So my trades are system-based. It's following the rules. Okay? You have to be consistent or it'll be different every single time. And then you have to take every trading opportunity. If you don't have the consistency, you're going to doubt and you're not going to have confidence to take the execution. And then what you're going to do is you're going to take the losing trade and you're like, and then you'll take another trade and it's like loses. And you're like, oh man, this isn't working. Trade's lost. But you missed it because you stepped out. And then you're like, oh man, I should have kept trading. And then you trade and then that trade loses. And then you don't take the next trade and that trade wins. We've all been there. So you have to have a consistent system that you can go through, a loss or two, but still keep going. But it has to be very system-based. And it has to be based on how the market works. It can't be based on a magical indicator or waiting on, fundamental realities to come to light. They will, and if you have the money and if you have the drawdown, fundamental realities usually show up eventually. So, but if you're wanting to get in and pull, grind profits out of the market every day, you need to see how the market actually works, which is it moves to fill order flow. Okay? So, yeah, the market works just like how does a grocery market work, Russell? The grocery market works to fill orders between you and Coke, you and, Del Monte, you and Mrs. Baird's Bread. They're still in business. There's so many different companies out there. That's how it works. That's it. If only there was a magical indicator. The magical indicator is knowing how the market works and following it. So to accomplish the goal of limiting losses, which is every trader's goal, right, and letting profits run, which is something a lot of people talk about, but few actually know how to do, you need a price action driven method. Price action driven method to define the steps in your trading. These steps must account for how and for, and this is a big piece that most traders leave out, trader psychology. Some of the rules that I've come up with in my system have been just to deal with my own trading psychology, because when certain things happen, you go, well, what do I do here? Do I take my profit? Do I let it go? And those battles. And so you need to have a system-based trading plan that deals with you, not just with the market, but with you, because it is difficult. We had a trade that we put on Thursday. I'll show you a chart of that here in a second. And we were doing a trade, and one of the traders was putting it on. He made over several $1,000s on the trade on the webinar. And there were traders like, should I take my profit now? Should I get out? I mean, this is a lot of money, but they weren't. It's like, follow the system. And it was beautiful. It worked out. It worked out great. It was live. We were just following along in the market. But you got to deal with you. You got to have rules. And so these are the rules to deal with those issues. And it's like, well, you can, but you're going to cut your profits short, and you want to let your profits run. So don't get into a trade unless you're willing to take the risk and let your profits run. And I do show a scalping method and other things like that for traders who are just dying to do that. I don't really scalp that much anymore. I paid enough money in commissions on scalping. I figured out there's a better way to trade. But you got to deal with all that. You got to put all those pieces together. Okay? So now let's hop into it real quick. This was the trade we did Thursday. There's a webinar on our YouTube channel or whatever. You can check it out. It's also built into our website and our trading forum and everywhere else. We post all the videos there. But right here, we had this is called an Apex BMX reversal, and I'll get into details here in a second. But we went down, and this is oil, and it's probably a little hard to see the chart because I actually took the screenshot of the video just for this one. A little above 105, and it dropped down to 104.35. We got out of the trade right here, and then we hopped back in 104.45. We went back up, and this was entirely rules based. The sell was where we were going to sell. The buy was where we were going to buy. Okay? So, let's see here. Yes, Ray, you are missing something, but we're not talking about Nadex right now. But I will help you on that. There's a perfect way to do it. You're probably not doing it correctly. We trade it every single day. But right here, right on down and right on back up. All right, here's oil. This is Friday's chart on oil. Okay? So green arrows, profitable trades. Pink arrows, losing trades. So we had a profit, a loss, a nice long profit. We trailed it up. This one was about out at break even, a nice profit, short, loss. We had 1, 2, 3, 4 profitable trades in and take advantage of that trade. And then we had another BMX reversal down here. We took care of that. Another profit, another profit, another profit. These are just trades that we were calling out in the trading room on Friday. Okay, all the prices are on the right side. There's too much information on here to show it, but I can give you all the screenshots. You can analyze them all in detail if you want to. So right over here, so this is gold. I'm just trying to show you like trades. That's all. I'm not trying to go into every price and every tick and every dollar amount and all that stuff. You're gonna be able to try all this out for free and check it out yourself. But I just want you to see this is actually Friday. Okay, these are things we do. And then right over here, Aussie yen. So here's 1, 2, 3 entries, another entry, basically a break-even trade, another entry. Aussie dollar, it got in, had like one break-even, one loss, and one basically small break-even trade right there. Looking over at Russell, some profitable trades. I'm just trying to give you a little bit of information to let you see that's charts. Those are charts that we were looking at trading on Friday that I was discussing with other traders. And a couple people, I'm not even going to go into this that much, but I'm a trader. I'm also an educational part with the North American Derivative Exchange in Chicago. Not really talking about Nadex. William, you could place those trades on Nadex. We were placing a lot of them on futures and Forex markets. So you can do it either way you want to. And there's a way to do it on Nadex. There's a way not to do it. And most people don't know how to do it. So if you want to learn how, hop on over on our website. We'll help you out. Okay? I also have a daily radio show every day. And I have another one that I co-host with Tommy O'Brien and Steve Rhodes on Friday morning. And I developed the Apex trading pattern after many years and many mentors. And I have some other tools. But enough about that. So doesn't matter. We're not talking about binaries. We only have 30 minutes, so I got to focus on one subject. All right. So first, we're going to go into what bar size to use, what pattern to use on all markets. This one pattern that I use on all markets. I have 3 filters that help eliminate bad entries. Think about it. The best way to cut your losses is to not have bad entries, to actually avoid those entries. Okay? 100% applies to Forex. That's why I just showed Forex charts. And it has an exact entry, an exact stop loss, an exact position size. Okay? Your system has to have that. Exact entry, exact stop loss, exact position size. And then you need to know exactly how you're going to trail your stops to let your profits run. The next thing is to know how far the markets will move each day. So, but yes, definitely when you can apply it to Forex. So we have traders trading on Forex every single day. So first is we're going to remove time from the equation because orders, price action, that's what matters, not 5 minutes have passed so I have a new bar messing up my charts. Okay? Time-based bars are illogical. The charts you were just looking at are not time-based bars. Time-based bars are choppy, and they also mess up your indicators. Okay? Here's an example of a non-time-based chart. Some of these bars are an hour. They took an hour to form. Some of them literally took, minutes, or these bars over here took less than 1 second to form. And it's a tick style chart. It's a unique type of chart. I call them diagnostic bars, okay? And so it's very, very diagnostic. Diagnostic is looking at how traders look at the market. And Paul, that's great. They're a style of Renko chart. They're a lot more advanced Renko bar in the sense of a Renko is from open to close, every bar is 6 ticks. Now you could have a wick on it, which is a reversal, and they open a little bit earlier. And yeah, you can use it on candles. Here's gold from Friday. You can use open, high, low, close. You can use candles. You can use whatever. So, so right there, it filters out the noise. It doesn't matter if an hour passes. Also, it captures true volume, whereas no Renko bars that I've ever seen capture true volume. We are actually recording all the volume with inside every tick of every bar, and they're more accurate than range bars. So if you try them out, put them side by side, these will blow range bars away. And we measure speed, which is called velocity. So not just how slow they go, which is a timer, but speed, which is velocity. So this is not a tick chart. It's a unique bar, okay? And it's called a diagnostic bar. And it's sort of a combination of the best of all those combined. So we're looking at how fast it goes. Because why does a market move really fast? Because there's no orders. It's trying to find orders. If it finds them, it'll keep going really fast. If it doesn't, it will reverse. It will not stay flat when it moves really fast to find orders. So these velocity bars down here at the bottom actually let me see when the market is moving really fast, and so I can trail my stops. I'll get into that in just a second, Bob. You don't need 20 patterns. You don't need 200 patterns. You don't need I'm sure some of you probably still have some of those posters on your wall with like the 3,000 chart patterns of candlesticks, and you can use this on intraday or daily, Patty. But for if you're really gonna, you basically just use bigger bars because you're not gonna use day bars. There's no reason to use day bars. 24 hours have passed, so I have a new bar. That doesn't make sense. How much price action has happened? And not really an HFT webinar, but the market moves to fill orders, and we use this one pattern to capture this fact time and time again. Big stops, I guess it all depends upon how you define a big stop. I define an accurate stop. And I'll go into where the stops are here in a second, KS. So over here on gold, for instance, the apex, which, think about a pyramid. The top of a pyramid is the apex of a pyramid. Pivot, that's the lowest point since they're including the A. And then E is the entry breakout bar. So we're actually going to buy like 3 ticks above the E bar. And the X is the completion of the apex pattern, which is a confirmation of the trend. And so you got APEX, APEX, and we literally follow this trade all the way up. It flips around. When an apex forms with the entry price being below the power line and go short. Okay? Yes, it's my own software, Diane. All right. So the three filters on our entry. So we had this bar, but which one can we get in on? What do we do? And remember, I'm giving you a very brief overview, so you can decide if this is worth you taking some time to check it out more for free. Okay? We have what's called the Powerline Filter, the Bar Breakout Filter, and the Barely Missed X Filter. This one's a little more challenging, but once you got it, it is amazing. So many reversal trades. If you love counter trend trading, like, you're going to be all about that BMX. All right, the Powerline Filter. It's really simple. We only trade in the direction of the power line, which forms every time there's an apex. So if the power line is green, we buy. If the power line is red, we sell. Okay? So what do you do right here? Quick quiz. If it's a green power line, do you buy or do you sell? What do you do? Buy. Yep. Buy, 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 buy. Got a red power line. Now what do I do on the next D here? Exactly. Sell. Okay, so that's the freeze. Yeah, some people. Some people get that confused. That's the rule. Okay, green line. The last line determines what you're going to do on the trade. Okay? So it doesn't matter what apex you see on the chart, which it'll be a green or red apex, but let's say you had a green and a red apex on the chart at the same time. If you have a green power line, you only buy. If it flips to red, you will then sell. Okay, this trade you would have got in, you'd have been out, and you would have done what's called a BMX reversal. But not going to get into all that, just saying follow the power line. Yes, so I do make fun of red-green probability smart because it's a green and red arrow all by itself. This is not saying that you buy randomly and you buy anywhere and you buy every time there's a green power line. There's a lot of times I don't buy. I just won't sell when there's a green power line. Okay, so green doesn't mean you do buy, it means you don't sell. So it's one of 3 entry filters. Okay, and so right here, red, this is Apple. Who thinks they could trade this chart on Apple? It's pretty simple. All right, so that's a pivot. It's a lot more advanced than a rotation pivot. But, and I'm not using this is a 100-tick chart on Apple, actually, right here. So, but it's not a 100-tick chart. It's a diagnostic bar. So I don't know if everybody's getting that, but these are not tick charts. They're not range charts. They're not Renko bars. They're a unique bar called a diagnostic bar. Entry at 9:31. This is an entry at, or actually, this right here probably would have been about midnight or 2 a.m. This right here, so that'd be first thing in the morning on Apple. So that'd be like 9:15. Right over here, we got 9:30, 9:58. So for pre-market trading there. Right here, we got, buying around 10:30, another one around 12:30. Yeah, so you got a lot of entries. You don't have to be there the entire time. There's constantly trades going on. So A stands for alert, P stands for pivot, E stands for entry breakout, X stands for confirmation of trend. All right, so we got the green and the red. Now, just because there's an E on our chart doesn't mean we're going to take it. So, no, I'm not worried about it, Rob. I'm just trying to answer your question. So, E-bar breakout filter. So, only if it breaks the E high by 3 ticks on a long, or if it breaks the E low by 3 ticks on a short, are we going to take it? Vikram, there's no chart right now. It's a PowerPoint. So, only if we buy, if it has to break 3 ticks. So you could use larger, like say you're using 30 ticks, you could make it 3 pips, 3 cents, whatever you want to call it, minimum, movement size. And so here's an example. This is why I do this. Remember I said I only sell if there's red, right? Red power line, I only sell. But I don't sell just because there's an E. Okay? So right here on this chart, you can barely, like right there, see an E. You can probably zoom in a little bit if you want to. Up using mortgage charts up there. And so notice how the next bar doesn't break 3 ticks below the E. Okay? And then right over here, there's another E. the next 2 bars, and that's the rule, 3 ticks below the E within 2 bars of the E bar. And I have videos that go into this a lot slower. I'm just trying to, like I said, give you an overview. Doesn't break it, we don't go short. Next bar, 3 bars below this E bar, no, so we don't go short. Right here, we do get 3 bars below the E bar. We can go short. We're able to take the trade. We have what's called an X bar trigger trailing stop. We have a velocity bar trailing stop. We're out of the trade, made some money. We have another trade, great, but we've also protected our profits. We got back in about where we got out. That's fine. I'd rather protect my profits to get back in. And then we go on down. Now, do have a question coming up, and I'm trying to keep going so we can get through everything. But I have traders that trade on TradeStation, Thinkorswim, MetaTrader 4, Ninja Trader, you know, oh gosh, eSignal, on down the list. They use this for charting because I can show you how to get the charting for free. Okay, the chart software and the live data for free. All right, and so you can get the data for free, you can get the charting platform for free, and then if you want to trade through Ninja Trader, you can trade through Ninja Trader as well. Or a lot of guys, they just place the trades on TradeStation, or they just place them on Thinkorswim or on MetaTrader 4, and they just use this for their charting. So no matter what your platform is, you can use this to do this system. It's just you may choose to enter them through Ninja or, you know, any other broker or platform that you want to use. And so Mark, this is a diagnostic apex chart. This is gold. So right here, here's S&P 500 futures. Okay, really choppy day. Could easily have eaten your lunch. This is day 1, day 2, day 3. I mean, the market was doing a whole lot of nothing. Okay, and that 3E bar filter. Okay, we had a green power line, but we don't just buy just because there's a green power line, and we don't just buy just because there's an E. It has to break the E by 3 ticks, and it didn't break the E by 3 ticks. So we didn't have that loss, didn't have that loss, didn't have that loss, didn't have that loss, didn't have that loss. And then we finally got in. So like this whole day, no entry. This whole day, we went the entire day right until the end of the day. And then we have an entry if you wanted, you know, depending upon if you trade overnight or not, or you could have got in after the market closed and opened, because it pulled back and retraced. Had a nice long trade. The important point is we avoided this. And I mean, if you trade for any period of time, you know, this is tough. Okay, this is really tough, and so you want to have something that really filters out the noise. Your system needs to filter out the noise. So not only do you use the bars to filter out the noise, but we also, I'll tell you exactly how to get access to it, because you're going to want to use a special link to be able to get the free 30 days, okay? And so you'll want to get this, okay? And then, so right here, the BMX filter, that's the third, pay attention. The P, which is what it means. I'm not saying pay attention. I'm saying the A means pay attention. P is the pivot, being it's the lowest bar since the A. E is the entry breakout bar. We're going to buy 3 ticks above that, and then X is when it confirms the trend. To get an X, it has to break the high of an A. And so you're going to want to use this with the diagnostic bars when, okay? In a day or two, okay? But the barely missed X right here, that is so important. This is basically sort of like a, you know, your classic double and triple tops and bottoms and the market reversing, okay? This is like that, but even better. We make some killer trades on BMXs. I mean, if I fly like right back up here to the beginning when I was showing yesterday's charts, you know, right there, there's a BMX. Beautiful trade. Okay, here's another BMX on Aussie. Not a major winner there. Market that sort of went flat, but made some money. We go up here. Here's gold. BMX reversal. BMX reversal. So here's, you know, one BMX reversal, another BMX reversal, a massive BMX reversal right there on oil. I mean, when I say massive, I mean we're talking $800 trade, just that one trade, plus all the other little trades in between. So it's very cool. Once you master the BMX filter, then you can actually start checking out the BMX reversals. Okay, so I'll give you an example of this. Is a BMX is when you have, right up here, you'd have a, if this broke the high of this chart, the chart's sort of cutting off the A up here, but if it broke the high, you'd have an X. Because you got alert, pivot, entry, and then X. If it broke the high, it would make an X. Okay? So you can use the candle bar type with the diagnostic bars. And you can do a DOM or chart trade, or you can do either one. But you actually have to trade it, DR. So right here, so you break the high, you make an X. Well, I didn't just say missed X. I said barely. Remember, barely missed X. Well, look at the charts. We showed, I think, 80, 90% just on Friday on all those markets combined. So just hop in. You'll be able to see for yourself. There's no better thing than you seeing it. You'll be pleasantly surprised. Anyway, so right here, breaks the high, and you go in here, and if it breaks the high, it'll make an X. And again, these are not range bars. Okay. If it breaks the high, it'll make an X. If it gets close to breaking the high, but doesn't break the high, it barely missed making the X. If it gets close to breaking the high, the A high up here, it's like right off the chart, it's a barely missed X. Okay. So if it's a barely missed X, what do? I get out of the trade. Also, I don't take any more trades. So I got in this trade, and then it got within it, and then within the next bar did not break the high, so I get out of the trade. So I get out, I have a little bitty loss on this trade, but then here's what happens. Check this out. I avoid this loss, this loss, this loss, this loss. I don't have any more trades. Exactly, it's a reversal signal. William, you're right on. So not only does it help you avoid bad continued long trades, but it also turns into a great reversal trade. And you can't really tell on this specific chart, but these are the deviation levels. And just like our last presenter was talking about, deviations, and it crosses up, it comes below, it hits it again, and then goes down. I mean, that's exactly what just happened here. Crossed up, came below, hit it, and then right back down. And so you had a BMX, you had velocity bars, you had RSI divergence going on, you had a bounce off the deviation levels, pivot, support levels, whatever you want to call them. You had like 5 things saying go short. So you had a great short trade, plus you avoided, by using these rules, you avoided all of the bad long trades. Okay? The red lines are the power lines. So every time there's a new apex, you'll have a red one on a red apex, and if it's a green APEX, it'll draw that until the next X. So notice how this one from the last apex over here draws until this X completes. So lots of confluences all in one chart. Okay? So a couple more things for you is your entry price, and I'm just going to make a stock example to keep it simple. Okay? Your entry price needs to be exact. We know we enter 3 ticks above the E. I'm not guessing. I'm not filling it. I'm not waiting. 3 ticks above the E. I have my stop order in, and I'm getting in. So let's say your stop order is 102. And then your stop loss, which we're going to talk about in a second, is 5 ticks below the P. Okay? So my stop loss, let's say in this case, is $100. I'm just coming up with an example. So the difference between the two is $2. So if I did 1 share, and you can apply this to contracts and lots and everything else. If I did 1 share, my share risk is $2. Now the way I like to trade is I don't like to risk more than 5% in a day. So I take basically if I'm down 5% in a day, I'm done. On the flip side, if I'm up 5% in a day, I take no new entries. I just trail my stops. So 5% a day. This is an example. You can use whatever you want to use, but this is my risk management plan. So say if you have, I'm just trying to give you an example, $5,000 in your account, okay, times 5% is $250 a day in risk, and ideally a $250 a day or more profit. Divide that number by 6, and that's the amount you can risk per trade. Okay, so $41 a trade. If I had 6 losing trades, but I get to keep trading, so long as I'm not down 5%. It also lets me know what my position size could be. If I could risk $41 a trade, and the risk on every trade is $2, that's 20 shares, per trade that I can do. If the risk is 41 ducks, that's 1, share, 1 contract, 1 lot. And, some people go, well, I I don't have an account, but I mean, that's not enough, $41. Well, you may need to go down to minis or micros, or you may need to check out something like Nadex spreads, or you may need to go over and, I mean, you may need to look at ETFs instead of futures if you don't have, I mean, there's a lot of different things to look at where you can lower your risk. And I'm not talking about your margin. I'm not talking about using 5% margin. I'm talking about using 5% risk. So where you get in and where you get out. So the divided by 6, okay, if your option fees are $40 a trade, then you need to hop in our site because I can show you how to get them a whole lot lower than that because that is ridiculous. We can get that way down from there. And wow, yeah, you're way overpaying. So 5% of your balance on the start of the day. So start of the day. But really, it's not hard. Take your account balance, multiply it times 5%. Okay. Divide that number by 6. That's how much you can risk a trade. What's the risk on this specific trade? It's XYZ. Okay. It's $2. Awesome. Well, I can risk $250 a day. I can risk $41 a trade. My risk is $2. Therefore, I can do 20 shares. Okay. So now some people will risk more, but I won't. Now I'm not saying 5% a trade. I'm saying, okay. And that sounds huge, but it's $50 on $1,000. Okay. You can still get that down. $50 on $1,000. That's not exactly that difficult. I'm not doing 6 trades a day. I may only do 1 or 2 trades, Donna, because I may make my 5% my first trade or 2. But I will stop if I have 6 losing trades in a row. But if I win 3 and then I lose 3 and I break even, and then I win 3 and then I can trade 3 more and then I'm done. Okay? So this is just my money management plan. You don't have to do this money management plan. I'm just trying to give you an example because I found most traders don't have a money management plan. And the number 1 rule in trading is survival. You got to survive. And if you blow your account out, you're not going to survive. Exactly. Dividing by 6. There you go. You got it, Chris. And if you make 5% a day, let's just say you had $1,000 in an account, and you actually could make 5% a day, which you're trying to make $50 1,000. You're not trying to do twice as many trades. You're not trying to go for more pips. You're just doing more contracts, twice the amount of contracts. Do it again. You go from 1 to 2, 2 to 4, 4 to 8, 8 to 16, 16 to 32, 32 to 64, 64 to 128, 128 to 256, 256 to 512 to 1 million. You go to $1 million in less than a year. Now, reality. Yes, you're going to have losing days. Yes, you're going to pull money out. Yes, there's always going to be liquidity, okay, issues. But that's the power of 5%. And most traders will go in and they'll make that 50 or $100 on their account in a day, and then they'll keep trading and give it all back. So this is about not giving it back. All right, and that's not even the main focus of the webinar. So stop loss. Where is our stop loss? It's 5 ticks below the P bar. Okay, if that price gets hit, get out. Don't hesitate it. Don't think about it. Get out. On letting your profits run, finding the other trade. If you don't cut your losses short, you're cutting your profit short. You're letting someone else's profits run up against you, right? So if you don't, you're going to kill all your profits. So if you don't cut your losses short, somebody else's profits are running against you. Do you want that to happen? Yes or no? Answer the question, and then follow your stop. I hear people, I don't. There are reasons for mental type stops, and there are a lot of reasons not for them, and you need to have actual stops. Now, you also need to know, how am I going to manage my profit? Honestly, entries are the easy part. Exits are the hard part. Okay, even stop losses aren't that hard. Trailing stops are the tricky part. So, exactly, Tracy. So if you have a plan that you can trust in that's 80-90% system-based, then that's why you don't want to risk too much. If you actually have proper risk management, I can take a loss. If you have $5 grand, you can take a $42 loss a few times in a row and not freak out about the next trade. If you're risking $250 a trade and you take 3 or 4 in a row, you're going to start freaking out. So part of your psychology is your risk management, which will allow you to take losses and trade well versus trade about making money. Because you've got to trade well. It can't be about making money. So it's like trying to win the Super Bowl by focusing on the Super Bowl instead of on the first down. It's not going to work. You got to focus on the first down every play. Got to get that play right. Get enough plays right, you win the game. You get enough games right, you go to the playoffs. You get enough playoff wins. You get to go to the Super Bowl. You go to the Super Bowl done. You get enough of those plays right, then you win in the end. But nobody ever won a Super Bowl by thinking about a Super Bowl. Nobody makes money in trading by thinking about the money. They make money in trading by thinking about the play right there, right then, doing what they're supposed to do at that moment and doing it right. So right over here, 7 trailing stop triggers. So we got the barely missed X. Remember, that's a reversal. So you probably might want to get out. You might want to get out if you got a reversal signal on the chart. Makes sense, okay? So I get out when that happens. We got every P bar, we trail our stop. It's really simple. Every PE bar, actually. So when there's a P with an E, we get out. Every X bar, we get out. Now, once the X bar gets triggered, then if there's a velocity bar, and I have what's called a 10-minute close deviation trigger, I just use this as it's one of those like psychology things. The market's moved a whole deviation. What do I do? And on my radio show, I just sort of discovered this because I go through these 10-minute charts. I fly through them really quick just to show the deviations in the market, how far the market's moved. Not so much as a trading style. But doing it every day, month after month after month after month, I realized, wow, this would be a really good just stop loss method. Not a entry method, but just a trailing stop method if nothing else has happened. And so, and then I have a trade runner trigger. What happens for that trade that just takes off and there's no velocity bars, it's in between deviation levels, there's been no P bars or E bars because the thing is just going straight up, okay? The automation is you. It's you mastering the market. And then, so I mean, you got to learn the 7 trailing stops. They're not hard, but you got to learn them. And we will actually automate them here in about the next 6 months. So we're working on that. But no matter what, you don't robot trade. You always want to be in there. And so I trail on everything. I don't ever have a target. So target trading cuts your profits short so often. And I always use trailing stops. So I'll literally put in my stop and I'll trail it all the way up. Now I am careful on things like MetaTrader 4 because the broker can see your order. And depending upon what kind of broker they are, they're probably targeting it. But beyond that, I don't do that. Anyway, so right over here we got that if you're looking for a discount. Small apex exception. What happens if you get a really little bitty pullback? Well, if you trail your stop too quick, you're going to get kicked out. So what this does, if there's a really small pullback, it's going to have you trail your stop to break even. So barely missed X exit. Like if we got in right there, we're in this trade, we got that BMX, we're out of the trade because we're about to go the other direction. Okay? And then let's see here. X bar trigger. Every time there's an X bar, trail your stop, trail your stop, trail your stop, trail your stop, trail your stop. It's pretty simple. X bar, trail your stop. 5 ticks below, the lower the bar, or the 8 EMA, whichever is lower. Okay? And I just use the 8 EMA. It's not because it's something magical. I've just learned it's a good offset. It gives me a little distance to let the market wiggle a little bit. And that's it. There's no magic to it. I mean, I'm sure you could use something else, but that's how I use it. And we may even have a better rate than that, Kelly. Anyway, so when a new confirmed P forms, okay, it's confirmed by a subsequent E. All right, so P then E. So the P with the E, trail your stop. P with an 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 E, trail your stop. All right. Yeah, we have analyzers. So like right over here, I have market analyzers. You're actually in the room, and you can pull this up. You have alerts firing off when certain things are happening. So we do have stuff that helps you out. And we have the trade room. We actually have a live trade room where we're trading it. And it's open 24/7. Right here, so new P bar, trail the stop, all the way up. High velocity bar. See when this yellow bar peaks? Pop. All right, so we got in, we trailed our stop at the X, but the velocity bar, this means the market will either go really fast or it will reverse. So I'm going to trail my stop. Same thing, got velocity bars right here. See, it's flying up and then it flips around. So I'm trailing my stops all the way down with it. Got the same thing happening over here on Apple. Now we have the deviation levels. And again, I know I'm going fast. I'm just trying to get you an intro, okay? We post these deviation levels every day on our website at 8:15 Eastern. And they're based on implied volatility out of the option market, and we calculate the intraday deviation formula for you. And it's pretty simple. When the 10-minute bar closes above the deviation, we trail our stop. If it closes below that same one without stopping us out, we trail it again. If it closes above the next deviation level, we trail it again. When it hits our stop, we're out. On this example on gold, the market fell 20 points after the stop got hit. Okay? Short, we're going to do the exact same thing. So we're going to trail the stop after it closes below each deviation level. And then put it all together. Entry price, hit X, trail stop, P bar, trail stop, X bar, trail stop, velocity spike, trail stop, velocity spike, trail stop, new P bar, trail stop, X bar, trail stop, P bar, trail stop, X bar, trail stop, PE, trail stop, velocity spike, trail stop, and we get to ride this market all the way up. So that's a $500 trade from here up to here. Not a bad trade. All right. And then the trade runner, if it moves half a deviation, I'll sort of skip past that one. It's not real, doesn't happen that often. And then the 6 bar to break even is basically if you get a little bitty apex right there. So which means less than 6 bars between the E and the X. So it's like E and the X is the same bar. You got in on that trade. E and the X same bar. E and the X is only like 1 bar between E and X. So that's a 6 bar, less than 6 bar apex. Then when it makes 6 higher highs, 1, 2, 3, 4, 5, 6 higher highs, we move all these stops to break even. So we gave the market room to wiggle around so it wouldn't kick us out. And then we got some velocity spikes, which all their stops up, and all these trades were able to get out right here. And they pulled a small profit, nothing major. Now this trade, it did great. It went all the way up, and we had other trades that went up. But just to show you the 6 bar to break even, example. And okay, so summary: remove time from the equation. Use one simple pattern. Filter your entries and set your stop losses and trail your stops to let your profits run. This software works on NinjaTrader, but you can apply the trades to Thinkorswim, TradeStation, eSignal, MetaTrader, whatever it is that you trade on. You can get the platform free. You can get the data feed free. We show you how to do that, okay? And without even opening an account, all right? And your Apex Elite member without opening an account with like a broker. We can actually show you how to get the data feeds free. And you may end up wanting to use some of these brokers because they have incredible and much better margins than the brokers I just mentioned. But anyway, so your Apex Elite membership includes the Apex Elite Toolkit and training resources. It comes with the Apex Elite Trade Room, which is open 24 hours a day. We have leaders are mainly in there during the New York session, but we do have people in there, around the clock. And then also, if you don't know about Nadex, I'm not going to go into it right now, but we have a binary and a spread scanner. You get access to that. You get access to hundreds of hours of on-demand education for future stocks, options, Nadex, etc. And we have a bunch of webinars each month. Actually, we have a Getting Started webinar at 10 a.m. on Monday and at 7 p.m. Eastern Time on Monday to get you going. Okay, and you can hop in the trade room on Monday. You're going to get access to the diagnostic bars, the sizer, the timer, the range, the pattern recognition software, the velocity bar, the scanner, the hot entry scanner, the analyzer, the trend lines, the classic NT7 strategy, and all the DV. And we're going to put $2,400 off that discounted rate. We usually have a discounted rate of $1,800 a year, but we're taking 20% off that as well. And so we're making it $1,440. So that's about $1,000 off the normal rate. But the first 30 days, there's no charge. So it's not a pay now, and in 30 days if you don't like it, we'll refund it. It's literally no charge. Come in, try it out free for 30 days.com/tradingpub. And that's going to take you right into our site. And this promotion expires this Friday, basically at midnight, 11:59 p.m. Eastern Time. Check your email. You can log in right away. You can install the indicators. You can watch the videos. So what's going to happen is you're going to land right here on this page. Fill this in. Again, try everything out 100% free for 30 days. And yes, you can use it on stocks. We have people that use it on equities. We have people that use it on Forex futures. We have people that trade longer time frames, people that trade, they're in there like scalping. We have people that are taking 6-hour trades. Just, yeah. And then this is an annual charge. We do have the monthly rate, which is $200. If not, let me know if you want to switch over to monthly. Everything out, you'll be all set up. And then once you do that, then you'll be able to log into the website, and under Apex Elite Room and Tools, I'm not sure if the screen's still sharing over there, you'll be able to see that there is all the trading videos, step 1, step 2, and step 3, and that'll get you started. Okay? Yeah, I mean, I showed a bunch of the historical results, but Alan, the best thing you can do is try it out for free and see it work. Hop in the trading room. So that's really the best thing that you can do. All right, well, I appreciate everybody's time coming on. I'll answer some more questions in chat, and but you'll see pretty quick how it works. You'll like it. And if you don't, then it doesn't cost you a dime. Up front even, okay? Y'all have a great day, and I hope y'all appreciate it and got a few ideas out of the presentation at least. I look forward to seeing some of y'all in the webinar on Monday in the trade room on Monday. I'll hand it back on over to Morgan.
All right, great. Thank you, Darrell. And again, thanks, Darrell. We appreciate you being here. Darrell's a great partner of the Trading Pubs. Provided tons and tons of education over the past 2 years. It's been about 2 years now, Darrell. We've been working together. You've been coming on here and sharing some of the great stuff that you do. So this link should work for you, I believe. It might just take a second if a lot of people are hitting it at the same time, Rob. That might be causing a bit of an issue. So just copy and paste it and then maybe hit it in about a minute or two. So real quick, Ron, do you want to go ahead and get your screen sharing going?
Hey, Morgan, you bet.
Appreciate you being here, Darrell. All right. Very cool. Well, Ron sets that up. One thing I wanted to mention to you guys, we did our first, yeah, that's right. I'll come up with a trivia question, one more trivia question for the day we'll do later this afternoon, give you guys a chance to win some more money. But one thing we did about I guess it was 2 weeks ago, we did our first trading contest, our first Trading Pub trading contest that we had a $2,500 cash prize. We gave away iPads, Kindles, all kinds of good stuff. And we're going to be doing another one coming up probably in the next month or two. If you're interested in doing that, basically we're going to give first shot to these people. Yeah, Mike was part of it. It was a good contest. I think we'll do another one. But anybody that signs up with this page, you'll get access to our Nadex library. And then what we'll do when we have another trading contest, and Darrell, the guy you just heard from, was actually the featured speaker of, he was kind of the education sponsor of our contest, so he shared a lot of strategies and things like that. But anybody that puts their info in there will definitely, in addition to getting access to the free library, will give you guys first crack at being a part of our next contest. So I'll type Darrell's link in one more time for the Apex Elite membership. He's going to stick around and help answer questions. I know Ron is working on getting his app sharing